Before we start, let me introduce a little bit about Orbit. As I was said, we scale startups to impact economic independence, health, and climate. We do that as a venture capital investor. We invest mostly in emerging markets, and as you can see, the MENA-P region, particularly Pakistan, is a very key area for us. Orbit Startups is part of a global venture capital fund called SOSV. We have $1.5 billion under management, and we're one of the most active investors in the world. And as you can see here, we are no new to Pakistan. We're the most active foreign investor in venture capital in Pakistan. And we do that because we think there's a big opportunity and because there's a lot of talent here. These are some of the areas that we're very active. And in those areas, we're the most active in the world. Some of these areas were mentioned during yesterday, and I'm pretty sure that will be mentioned today as some of the key areas that need to be addressed. We believe technology innovation and startups are one of the most efficient ways to change these challenges, to address these challenges, to find solutions, and to do that in a way more efficient manner. Where's our secret of success? As a venture capital fund, we obviously invest in every single startup, but capital is not enough. Every single time we start working with a company, the first thing that we do, we share mentorship. We share lessons learned, best practices that we can exchange from funders, from investors, from everybody in the ecosystem that is willing to address some of these challenges. Through this mentorship, we help the companies grow. And to grow, these companies don't need just capital, they need more things. And only after that, we work with those companies to help them fundraise, invest in more capital, but also secure more capital from other investors. We don't do that alone. We're lucky to have a network of more than 600 mentors that support those companies. And internally, we have 50 people full-time working with those startups. Only 10 of them are involved in investment, something that is very rare for a venture capital fund. When we talk about growth, what do startups need? What startups need, if they are consumer, they need users. Today, with our portfolio, we have over 200 million monthly active users that our startups share. And collaboration was one of the key ideas that we shared today. We also work with many multinationals, and we're very happy to have the opportunity to come here and build more relationships so together we can help cross this gap between startups and multinationals and bring more innovation to the market. And of course, we work with investors. We work with global investors, but also a big range of local investors from all the regions where we're very active. So, because today the idea is to share it. As you can see, we do a bit of everything, everywhere, all at once. You might remember this title of this movie. So I'm trying to make this a bit more entertaining and fun for everybody. And that's the way I'm going to address the key topic that I want to talk today. Today, I want to talk about the future of fintech. Originally, I wanted to talk about something more generic, but there's been already a lot of conversations, and I'm going to dig deeper in one of the areas that I think is more important, where we see more opportunities, particularly in Pakistan. So let's start with everything. Fintech today. A very important fact for us VCs is that today fintech is one of the top areas for investment in venture capital. More than 20% of the global venture capital is invested in fintech. It is by itself the largest industry, and it's the largest industry because of the amount of potential it has. So what are VCs investing in fintech? What are the areas that we think there's more opportunities? First, we're investing in enablers. An example of an enabler, digital payments. Originally, those digital payment solutions were helping to make transactions online, but more and more, those digital enablers are also allowing to make transactions offline with digital payments. Catalyzers, companies that are trying to use all of these online and digital technology to improve the real economy. Lending has been a bottleneck for companies everywhere, being able to secure working capital. Online lending brings efficiency in terms of distribution, in terms of access for both the borrower and also the investor that is trying to invest in this asset class. There's also companies that optimize. One of the examples that I like the most is the wealth management. Wealth management for a long time has been an industry only available for the people that has a large enough amount of capital to invest, and they could afford somebody to manage that wealth for them. Today, this is something that, thanks to technology, is enabled for people that can save $1 or even less a month. And at least they can continue building their wealth, and more important, they can build that habit. It has a change. It has an opportunity to transform. Some of these industries, some of these companies are transforming completely large industries. Digital banking is creating a massive revolution, making many things available for many individuals and small businesses. But probably, as VCs, the types of companies that we like the most, the types of companies that we're more interested in, are the companies that have such a capacity to change that they make the old system obsolete and they create a totally new landscape for innovation. For example, digital currencies. All these digital currencies are not just money, they are not just a reserve of value. They enable multiple times of options that today we cannot even imagine, and it's only the beginning. So, what are the drivers of change for all of that? What is helping all of this happening? Why so much of this venture capital is going to this industry? This is probably one of the most conservative industries that I've experienced with. We invest in healthcare, we invest in education, we invest in construction, in manufacturing. Financial services, very conservative industry. Well, as we see, and in my case, as a technologist, I might think that technology is the main driver. But the truth is that a lot of the technology that is powering a lot of these financial technology companies is not super disruptive. It's not rocket science. There's way more complicated technology in healthcare and in many other industries. Sometimes people think about regulation, especially when you talk about the digital currencies, as a problem. I actually believe that regulation is very useful and very important, and there's a massive need for collaboration in that space, because regulation creates trust, and probably trust is one of the most important obstacles. But let's move to think what is driving that change. I think the most important driver of change is consumer behavior. Is the fact that consumers want more. Consumers have needs, and those needs are something that they need to find solutions because they cannot stand. They need to find alternatives. And most important, collaboration. Once players in the ecosystem start working together and they start not just focusing on their small walled gardens, but working with more people and trying to find the space for each of them in the value chain, and that very monolithic value chain is broken, and there's more players, then there's more opportunities for change and innovation. So let's talk about everywhere. Let's talk about the location. When I talk about fintech, I talk about venture capital, still most people keep thinking about developed markets. And I always question, well, is developed markets where you can have the most impact with financial technology, with fintech? Is where you can achieve the most change? Is the place where you have the most innovation? And when I'm talking about innovation, I'm not talking about invention. I'm talking about innovation. I'm talking about applied results. I'm talking about this impact and this change that is achieved. Today, this is something that I'm pretty sure that all of you will know, but I still have to remind this when I talk with people in Europe or US, that 85% of the population in the world lives in emerging markets. And when we talk about financial services, 80% of the people living in emerging markets are either unbanked or underbanked. What we need to bring new companies is customers. What we need is users. What we need is an opportunity. What we need is a gap. When I was preparing this conference, I was doing a research. I'm happy to share this information if anybody is interested. But apparently, more than 80% Pakistanis don't have a bank account. That is not a surprise based on the numbers that I was looking at. What was a surprise of that research is why. Why they don't have a bank account. There's always a lot of assumptions. There's no infrastructure, there's no service. Well, that was not the reason. The most common answer is, I don't have one, and I don't think I need one. I don't see any value in a traditional bank. I don't see any benefit of using that. Meanwhile, you see the growth of mobile wallets exploding. And I was yesterday talking with somebody here that was telling me about the growth of their digital payment startup in Pakistan, and I was impressed about the explosive amount of growth. What was the secret? The secret is value and need. That's what drives adoption. It's not about fancy technology. It's about solving a real problem that addresses something that people need. That is something that is not new to other markets. Still, many people are surprised when I tell them about the fact that, you are working on trying to drive this digital payment. Well, in Kenya, they have 85% of mobile payments already. That is something that helps a lot with many, many areas of the economy to try to drive not just more consumption, but more access to services, more financial inclusion for everybody. I'm Spanish. I work for an American company, but I live in China. I moved there in early 2008. And when I arrived to Shanghai, and I think about fintech, every single payment was cash on delivery. Very similar to the situation that exists today in Pakistan. E-commerce, anything. You wanted to buy tickets to fly anywhere, and a person will come to your home, and they will give you the ticket, and you will pay them cash. It was great when 3 months later we could pay with a credit card, but still the person had to come. Just in 10 years, what was the situation? There was this company called Alipay. I don't remember the last time I have used cash. I don't remember the last time. There's many places that they don't even have the option to pay cash. You bring cash and they will look at you. That makes so easy for anybody to get access to pay anything, offline or online. We talk about giving people the right to save and get more for their money. Yuebao is an investment product that was launched in China that in 3 months, only in 3 months, managed to get more investors than the stock exchange in China in decades, making investment something way more accessible to many, many, many people. And my bank, one of the first digital banks in China, powering SMEs and allowing all of the small factories and small traders to be able to flourish and develop. That just in 10 years, from nothing to probably one of the most advanced options. And digital currencies. In 2018, China was already preparing to run the first pilots of their own internal digital currency. Just 10 years, just a decade, the change was dramatic. There was a leapfrog of technology where we went from nothing to leaders, to the most advanced. And this is something that we see as a possibility in many, many emerging markets. So how is that happening? Well, this is happening all at once. Because the beauty of financial technology is that this is not just a change, a transformation of the financial technology, the financial industry. It's changing everything. And that's what we're seeing with many of our startups, thanks to the concept of embedded finance. How finance is becoming an engine that makes things happen. How can you improve health? Easy Hospital is a company that helps improve healthcare and results of access to a proper care when you are sick, just by making sure that you can pay for your healthcare. When the treatment is available, but the problem is that the bureaucracy, even of your own insurance, is so slow that it will take for you 3-4 days to get approval for a payment, and then you cannot receive the help that you need. Saving lives, but making sure people can pay for the information. InstaWall, one of our companies in Pakistan, making sure that more small owners can actually sell product and not be constrained by an 85% of cash on delivery that gets payments locked for weeks. As products are sent in cash on delivery, sometimes cancellations happen too often, that those cancellations lead to products lost. Reconciliation of cash payments can take 2 weeks in a place where there's very little digitization of the process. Just by adding that layer of digitization, small businesses can flourish, and consumers can get access to better products at better prices. Or improving retail. In this case, I'm talking about MarketForce, a company in Africa that is helping these small shops make sure that they have more control of their business and they're not limited on what can they sell based on the capacity that they have to buy product in advance. And we have also companies in Pakistan doing the same. So all of these are challenges that are local. But what I'm more excited about that is that all of these innovation happening in emerging markets, it's not just constrained to a very local product. It's not just constrained to local startups. We are already starting to see global innovation from emerging markets. BizBuzz, a company out of Singapore, that built a solution to have an alternative credit score for unbanked and underbanked, already operational in Asia, in Africa, and Latin America, by solving a solution very relevant to the global south. But what we're seeing is when you are able to solve a problem that is functionally valid in emerging markets with the constraints in terms of cost and make sure that they can work under any circumstance, you can also grow global leaders. And that's the case of Insuro, still in an early stage, a company operating in Africa, in Asia, in Latin America, but now being approached by companies in Europe and the US because they build a solution that is 10 times better, 10 times faster, and 10 times cheaper. So I'm looking forward to have an opportunity to see and invest and work with some of the Pakistani companies that will be these global leaders, and I'm pretty sure that working together, this is something that is perfectly achievable.